So hi everyone. I'm here back with Kevin Still from Kevin Still Consulting. I know you got roles in the vulnerability registration service. So Kevin, good to see you again. I know we chat a fair bit. I suppose what I thought it'd be worth us chatting about a little bit was the new consumer duty that's kind of coming up. So obviously we had the guidance that kind of came through or got solidified, and I know there's a deadline now, right at the end of October.
Yeah, you're quite right, Chris. So there's been quite a long lead into this with two consultation papers, but I think the reality was at the end of July when the policy statement, so what is known as PS 22.9, and what came with that was some non-handbook guidance, which is called FG 22.5. But the combination of those really sets out the landscape in terms of what firms have got to do. And that's based upon a strong presumption that you've actually read the previous consultation papers and done some preparatory work for it. Whereas in reality, I think it's hit a number of firms quite hard that they've got to think about the first deadline, which is the 31st of October, to have a transformation plan ready that could be ready for inspection with the regulator themselves.
Yeah. So what needs to be done at the end of October, right? Because that's not far away. I mean, we're what, sort of the start of September now, and it gives like a couple of months. So what needs to be there? Needs to be like a duty officer, and then there's a plan that everyone has to put together.
Well, there are a number of obligations and commitments to it, and probably strong suggestions in amongst it all. But the deadline for the first round of implementation is July 2023. And then there's a secondary target of July 2024 for closed accounts. But I think most people will be looking at what's happening with new onboarding of customers and how you treat them and existing active customers. Now, for those that have got a supply chain, there is an earlier deadline of April 2023. So if you happen to be, for example, a principal with appointed representatives or any form of agent network, you need to be ready by April to give them 3 months to implement what the new manufacturer distribution chain would look like in the language of the regulator.
I mean, the FCA might be sort of auditing, as I understood it from the 31st of October, like auditing the plans or like reviewing the plans. How do you know if the plan hits the right point, right? Because there's these 4 outcome rules, if you just sort of go back over consumer duty, that they're going to be sort of go against or like review against. But how do you make sure that you've ticked all the boxes, I suppose, to a certain extent, in terms of making sure you're minimizing risk?
Well, I think as the UK Finance have just highlighted, it's not a tick box exercise. And the problem with principle based outcome focused regulation is it's not rule based, and therefore you can't go through with an easy checklist off the back of that. So the reality is they've given you lots of clues within it, and they've actually posed a lot of questions within the non-handbook guidance. And my suggestion first up is to ask yourself those questions and whether you can say yes or no to them, black or white, because I think greyness is the area that is going to cause concern. They've also suggested strongly that this is a risk-based exercise. So where this relates to consumer outcomes, and in particular avoiding consumer detriment, start in the places of highest risk. And they've also suggested very strongly that you put as much effort into the back end as you do into the front end. So not only will you be looking at financial promotions and onboarding processes, but it will look at the whole life cycle of product design and whether you are delivering the right outcomes, particularly for active accounts, all the way through into complaint handling and beyond. So I think most firms will have an idea, particularly in the sectors they're in, where their areas of exposure are. But fundamentally, sitting underneath this, it's about, can you actually evidence things, and can you make sure that your management information, key performance indicators, are outward focused rather than inward focused? So are you meeting the client's objectives, and indeed do you know what the client's objectives actually were? And when something cancels or terminates, was that a good outcome or a neutral one or a bad outcome?
Yeah. I mean, obviously, you know the industry really well. What do you think the state of readiness is if you speak with people across the industry in terms of putting some of this stuff in place? I mean, it seems like there's quite a lot to do to actually get ready to ask some of the questions at a sort of quite a fundamental questioning level, if not a detailed sort of like process review kind of level.
I think anecdotally, if I looked at it in the middle of the summer holidays in August and asked companies, have you appointed your duty champion? you did receive a lot of blank looks as to what is a duty champion. That came in the final wave of changes, but there needs to be somebody that is sufficiently capable and competent to be communicating directly with the board, the stakeholders that are accountable under the senior management regime, to actually take you through this transformation process. And that's got to cover all the bases. Now, this isn't a technology-led initiative. It's all about business readiness. And very much of this goes all the way down to the conduct rules to frontline staff. And I suspect, therefore, the acid test will be, does somebody at the coalface dealing with consumers actually understand what all of this means?
Yeah. And I suppose when you look at the totality of stuff that needs to be done, you talked about like avoiding customer detriment. I know there's pieces there around like communication channels and some of the cross-cutting rules I thought were quite interesting in particular. Where do you think the sort of like the top 5 things would be in terms of like, this is where you think the industry we've got to really focus on, because there probably isn't the readiness level there yet?
I think if we focus more around the small and medium-sized firms, and again, those that are probably likely to have several products and services, I think the customer-centric approach is one of those, and if fundamentally your business is still very siloed in terms of how you deliver things, the regulator has been very clear on that in some of the work that they've done in the last 12 months or so around the vulnerability guidance, which was FG21/1. Now, even that's got to be updated, because part of this process is disapplying Principle 6 and Principle 7 in favour of the new Principle 12. Now, under the TCF, treating customers fairly, there are 6 TCF outcomes. They're being set aside as well. Now, a lot of people's core staff policies are built around those fundamental outcomes, and that includes things like basics like complaint handling. But within that, relating to the advice you give and then how you communicate, all of this is really looking at a ground up review of what you've got, and these are really frontline policies and how they are actually delivered and operationalized. So it's quite sweeping. So if you don't actually have that customer centric view, which I said, the regulator highlighted was a problem. And for those firms that couldn't do that, the tell us once type approach becomes very difficult indeed, particularly around people that show characteristics of vulnerability. Things like fair value will vary dramatically from one product or service provider to another. Clearly, the insurance sector has been hit very hard around that, between how you deal with new clients versus existing clients. And channel could become a big factor in that, as to, should something be cheaper if you're doing it digitally versus in a branch. Whereas others, where there's actually no direct cost to the consumer, it's free to consumer, fair value is going to become less of an issue. But quality of service, particularly communications, and there was some interesting stuff, Chris, that we've discussed before around digital first. And there was some very strong warnings in there that if you've adopted a digital first model, beware in terms of who your target audience are. And there are lots of things in there around words like tech savvy. You're not expecting your whole client base to be tech savvy. Many people have got a smartphone. It's one of the primary methods of engagement, but it doesn't mean to the exclusion of not using the telephone itself, or traditional mail and other communication methods. So all of those are factors in this relating to your own risk appetite, your target operating model, realigning that and said, in the way that we operate, is it geared towards those clients? Now, for those with infrastructure like banks, where they had a branch network and they're closing at a rate of knots, but somebody took, their bank account out 20 odd years ago, in the case of probably you and I, did you buy into that at the beginning? And did you have an expectation you were still going to get serviced in the way that you wanted to? And for all of us that have said, look, they've sat in a call queue saying your call is important to us, but we're experiencing unbelievable volumes at the moment. People are very cynical at the moment because we've come out of pandemic, and they expect people to be resourcing the phones adequately at the moment. So It's not just the method, but it's actually the response times and the quality there that living up to the promise. And often this relates to the financial promotions. If you're promising the world, but the underlying experience doesn't live up to it, that's all part and parcel of the consumer duty when you look at it relating to are you meeting the client's objectives?
And one question I wanted to ask you is obviously, been talking quite a lot the last couple of weeks around cost of living. There's now help around energy prices for consumers at least anyway. I mean, how much do you think the consumer duty is going to play into the cost of living, and particularly its importance now going forward from a regulatory point of view, versus making sure consumers are both either getting help directly from the government, but then also getting protection as well from the regulator?
They should go hand in glove. And I think, again, from the FCA expectations, I think they probably have gone the extra mile in laying some of this out very clearly in terms of the non-handbook guidance of illustrating what is good practice, what is poor practice, and most recently in June writing the Dear CEO letters, and then the more public ones, which were consumer facing in early July, which talks about the cost of living explicitly in relation to the consumer duty, and making sure that lenders don't put their own commercial interests ahead of those consumers. But this is also cross-sector, and as we've seen with things like gambling, it's not targeting the gambling providers, it's targeting lenders who may well actually be funding a gambling habit and using some of the tools at their disposal. When they talk about things like open banking, but not exclusively so. It's talking about a toolkit that you use appropriately and proportionately to get better understand your customers. And if you've got a long-standing arrangement with a customer, let's say like a credit card or a mortgage, what are you doing to check in with those clients on a regular basis to understand whether they are suffering pain, either short-term or long-term? And critically, will it affect some of the key payments they make, like your rent, like your mortgage, your council tax, your energy bills, and not end up prioritizing a product like a credit card over and above something that is an essential cost? Yeah, and I think a lot of this again comes back to how people are prioritizing their resources, or whether how they're badging projects. We've talked about the rise of the whole ESG agenda, but it's meant to be intertwined with everything else you're doing. And some of those social value elements of it not only relates to the clients you're serving, but the staff well-being of the people you're dealing with. And indeed in my sector, the debt advice sector, the well-being of advisors, where in many instances they're not able to offer any advice because the consumer's got no money. So the Money and Pension Service has just issued a call for evidence around how do we deal with deficit budgets, because all of the advice providers and increasingly debt collectors are contacting consumers where they may have already done an income optimization exercise to find they still got no money at the end of it, and something's got to give. So we need to be more innovative in how we deal with that, and particularly for consumers where they are likely to have multiple relationships with many creditors at different levels, that they don't have to go through the same frustration over and over again. So data sharing, as I said, the tell us once concept is critical.
So back on consumer duty, I mean, it seems like, the warnings have been given. It's now live. We've just got to get our act together by the end of October. And so in terms of like where to start, I mean, you talked a bit about doing that. I mean, what are the three steps people have got to do? Like appoint the consumer duty champion, but then do that.
I think the champion's a very early step, and I think we then got to go into a sort of a reality check, which is almost like a self-assessment gap analysis. And part of that will align with how you used to do TCF audits, to look at what your view of the expected culture standards of the business are against the reality, and then relate that on a risk basis to the areas you need to prioritize. But the implementation plan has to stand quite detailed scrutiny, not only in terms of what you think it's going to cost, because the FCA are very interested in that from their own impact assessment, but that there aren't major gaps in it, so that when this is reviewed 3 months in, 6 months in, you suddenly find there's a lot of scope creep or a lot of things coming out of the woodwork that people didn't anticipate at the beginning. So it needs to be quite a thorough exercise. And you can do that top down and bottom up, probably equally effectively, but meet somewhere in the middle and it says, right, we do have some serious challenges, particularly if they relate to infrastructure within the organization, that suggests we don't know how to deal effectively with some cohorts of customers, and that may require, reasonably incisive decision making to prioritize projects where there's a very crowded agenda. So you and I have both done a lot of program management work. It's going to be looking at those dependencies and say, right, we've also got a Consumer Credit Act reform project going on. We've also got a program going on around statutory debt repayment programs. We've also got a program going on about credit information, market study. And those are going to be applicable to a lot of consumer credit firms at all levels. And what is, the maximum that you can stress a senior manager out? And that, again, the regulator provided some early warnings at the beginning of this year targeted at compliance monitoring executives and those looking after money laundering and financial crime. And part of that warning was not so much about their competency, about the amount of bandwidth they've got.
Yeah.
So some of this is actually then looking at, under the supervision of these key senior managers, how do you bring in trusted parties to mobilize activities alongside business as usual, and then make it business as usual in due course?
And it seems like there's a lot to do for the next 6 weeks to get the plan as robust as possible. But then that's really like the start of the beginning, isn't it? Because then you've got to then implement it. It's going to be a busy year, that's for sure.
Yeah, those discovery processes, understanding the sort of as is environment as we all discuss it, and looking at what the size of the swamp is that needs to be drained is really quite important here. And indeed, for larger organizations, it's going to be a fairly mammoth exercise. But bring that down to a small, medium-sized firm, even that, when you look at it from a bandwidth point of view, what do you need in terms of focus on that to get it to the right level, which may relate then to things like investment, aligned to some of the challenges that are faced? Because a lot of firms at the moment will suffer as a consequence of the cost of living increase if they're based around in the collections world on contingency fees. If you're not collecting any money, you don't earn any money. Similarly, lending is going to be under a lot of scrutiny in terms of who you are lending to and why, and can that be construed as predatory, and exploiting people in difficult times? And that's been a very interesting discussion that you've had recently with the credit unions.
Well, Kevin, it's going to be an interesting time. I know you've been doing quite a bit of work on it in the background in terms of like the checklist and sort of helping around that. But it's definitely going to be a fascinating sort of 6 weeks to see how the readiness level and just making sure that people are prepared. It does sound like we've got to get our skates on in terms of getting it done. I think just with the cost of living stuff going on in the background, it's going to be ever more important. So Kevin, thanks very much for joining me, and no doubt we'll chat again. There'll be further updates. We'll see how it evolves.
As ever, a pleasure, Chris.